to the CLS Market Review for the week of August 8th, 2013. I'm Matt Harwell. Stocks bounced back in July and bounced back in a big way. The S&P 500 gained over 5% on the month. However, it wasn't just large U.S.-based companies posting gains either. Smaller companies also finished higher last month, adding 7%. International stock markets were also positive as the Morgan Stanley All-Country World Index ex-U.S. gained nearly 4.5%. Even the bond market posted a slight gain as the Barclays Aggregate Index gained 0.14%. 10-year U.S. Treasury yields finished last month at 2.58%. Despite nearly all financial markets gaining last month, the U.S. stock market is still significantly ahead of the pack. Most balanced, diversified portfolios, while still posting solid gains and helping investors remain on track, if not ahead of schedule, toward their financial goals, continue to trail the S&P 500 in recent time periods. In fact, less than 1% of all asset allocation mutual funds in the Morningstar database are beating the S&P 500 this year, or over the last 1, 2, 3, or 5 years for that matter. Given this market performance, what should investors be thinking and doing? For this, we go now to our Chief Investment Officer, Rusty Vanneman. Rusty?
Thanks, Matt. In my travels over the last month, I was fortunate to be able to spend some time with investors on a beautiful day in an office overlooking the ocean. The beach was at low tide. Having lived next to the ocean for a good part of my life, it did make me a bit nostalgic for the tides, the rhythm of the ocean. While explaining the slides from our latest quarterly market review, I discussed the strong relative performance of the U.S. stock market versus other asset classes such as commodities and fixed income. I explained how the markets have a tidal quality to them. Market cycle. As the tide ebbs and flows, the markets also ebb and flow. Markets rise and fall not only in absolute terms, but relative to each other. Currently, it appears it could be low tide for asset classes such as international stocks, especially emerging markets and fixed income. Is this a time to abandon these asset classes? Can they continue to underperform? They could, of course, but I believe for the long-term investor, it seems to be a better bet to maintain, if not add, to some of these positions. Let's look at one market that might be at low tide. This chart is from our quarterly market review. It is of emerging markets versus the U.S. stock market as defined by the Russell 3000. As of June 30th, emerging markets trailed the U.S. market by 20% over the last 6 months. Earlier this month, they trailed by as much as 30%. They have since bounced to performing by 25% over the prior 6 months. Looking at past history, when emerging markets underperform by this much, they usually snap back. The tide will turn at some point. Given they have outperformed in recent weeks, could the tide finally be turning? To many investors, investing in a market segment simply because it has underperformed isn't satisfying. Remember, though, emerging markets comprise nearly 85% of the world's population, nearly half of the world's economy, yet they only make up less than 20% of the world stock market. Even more notable is that emerging market stocks have 3 times the revenue growth as U.S. stocks, yet they trade at valuations that are nearly half that of the U.S. At CLS, we remain committed to emerging markets and are considering ways to add to current positions. Another popular question coming my way of late, is this a good time to invest? Given that the stock market is up sharply this year, especially since earnings growth is not, it's a fair question. Yet for investors in balanced, diversified portfolios, again that own fixed income, commodities, and international securities, remember that these asset classes are generally not up on the year. They're on sale. Thus, I believe it is still a good time for investors in balanced portfolios to consider adding to positions. One can still buy many assets at reasonable values.
Thank you, Rusty. In this week's PDF and podcast, we'll discuss another asset class investors are questioning, fixed income. That concludes our update for the first week of August. For all of us here, I'm Matt Harwell, and we hope to see you back next Tuesday. Have a great week.